Our next presenter is Mark Duclair, Managing Director of Astral Resources. He's probably one of the only Diggers and Dealers attendees so you can find having an early morning swim down at the Kalgoorlie pool. Mark has more than 25 years' experience in the mining industry, including senior operational and executive roles. He was Managing Director of Egan Street Resources until its successful takeover by Silver Lake in 2019. As Managing Director of Astral, he has led the strategy to establish over a 1 million ounce resource in the Kalgoorlie district, providing the critical mass for a new integrated mining and processing operation. Thank you.
Thanks, Courtney. Thanks for the introduction. Big thank you to Miles Ertz and the Diggers and Dealers team for giving these small stories a platform at this conference. I actually did cringe internally when I was realising that I was following Flan. I knew he was going to do his TED Talk thing all over the stage, and I knew I was going to sit right back here where I'm feeling nice and safe. So just in relation to this, because this story will potentially be new to a few of you guys, I will make this a bit of a general overview. As a company, we've actually been around for 35 years, so we've existed for a long, long time. But the actual board and management team came onto the scene only 3.5 years ago, and we came onto the scene for the Mandilla Gold Project. We fundamentally believed it's got the potential for the scale to actually support mine development, and that's what we've been focused on. So Mandilla is actually only 70 kilometres south of where we stand here today. There's 1.27 million ounces in there at the moment. Thea, which is the cornerstone deposit of the Mandilla Gold Project, is over 1 million ounces in a single open pit. We've drilled over 130,000 metres since we've been involved for the last 3.5 years, and just in the last 7 months, December last year, July this year, we put out 2 mineral resource estimates. We've added just under 500,000 ounces to that resource base, and it's been coming in at $17 an ounce. So we are still able to grow this project cost effectively. We're currently drilling at our second project, Fayetteville, at the moment, and that is literally 14k south of where we stand today. And we are currently also working on a scoping study, which I am super confident. I mean, I'm not going to make absolutes like Flan, but really confident that that is going to have the scale to support mine development. So it's been about 6.5 years that the team and I have been involved in this junior exploration space. When we first got involved, I chatted to some fund managers, some of the listed fund managers, and tried to get a sense of what actually makes a good investment for those guys. And it's actually not all that surprising, but it came down to management. Those fund managers put together these Manhattan-style charts and looked for a consistent thread that generated value for them as investors. And they said they'd invested in some great management teams that took some average assets and realised fantastic value for their shareholders. And similarly, they'd unfortunately invested in some pretty average management teams that took a great project and simply torched it. So Astral Resources is a management team that actually has form in generating value for our shareholders. Back in 2016, we took a small high-grade project that really frustratingly for me was being described as maybe too small and a little bit average, and we took it to the brink of development. We were fully permitted, the DFS was done, we were trying to secure finance, and then we had a successful approach from Silver Lake Resources, and they took us out. Now, that was a great outcome for our shareholders, and they got a good return. And that's what our plan is to do here with Mandilla. We have a fantastic project. It will have the scale to make it into development, and it will achieve a fantastic return for our shareholders. So in January 2020, when we got involved, as I said, we joined because of Mandilla, and we joined because of the potential scale we saw. We are a very, very simple company. We are gold focused, and we are focused in the West Australian goldfields. This map that's on the screen at the moment, between Kalgoorlie, Coolgardie and Kambalda, there is 30 million tonnes per annum of processing capacity specifically for gold that already exists here. And between Evolution and Northern Star's recent announcements, that is going to ramp up to 45 million tonnes per annum of processing capacity in this region. Because of that, this area has an exceptional record of turning good gold deposits into commercially operating gold mines. And Mandilla and Fayetteville sit right smack in the middle of this area. So now just focusing in from that district scale map of the goldfields to now Mandilla sitting over the local area geology. We have 4 deposits here: Thea, Eos, Hestia and Iris. We drilled for 17 months from January 2020 when we actually put some cash into this company and got it moving. And after 17 months, we put out our first resource estimate of 500,000 ounces. Another 26 months on from there, we grew by another 153% to the 1.27 million ounces we have today. These ounces are constrained within a pit shell which uses a $2,500 gold price. The scoping study that we're working on will realistically probably use a $2,100 gold price for the detailed design and scheduling, and I am exceptionally confident that it will convert at a really healthy rate from resources into a production target. Another one of the things I guess we've learnt over the last 6 years in this junior exploration space is it can be pretty difficult. I mean, you're only as good as your last exploration program, and when the sentiment turns and the market becomes a little bit more difficult, the reality is you can be having some exceptional technical success with your project, and sometimes it's just not correlating to what you see in your share price. Now, Astral Resources, our last mineral resource estimate, we were focused on increasing the resource confidence at Mandilla. We got a 69% increase in the indicated category, and despite the fact that we were actually trying to increase that resource confidence, we also added another 231,000 ounces at $18 an ounce of exploration discovery cost. The 2022 program was another 250,000 ounces at $16 an ounce. We have a track record of continuing to grow this deposit, and our plan is certainly to keep that going. The 2023 diamond drill programs into Thea averaged 108 gram metres of gold down the length of each hole. Our 2022 program, which I actually thought was an exceptional program, averaged 97 gram metres. So our ability to target and generate excellent results from our drilling is continuing to improve as we increase our understanding of this deposit. When we drill perpendicular to this large granite intrusion, or the quartz vein arrays within the granite intrusion, we get some significant gram metre results with multiple intersections down the hole. So drilling in this orientation so far this year, we've averaged 213 gram metres for each diamond hole. Now, I want to talk a little bit about the resource and just resource confidence. We are acutely aware of the risks of developing a large, low-grade open pit. The reality is the past performance of our peers has not been fantastic, and it doesn't inspire a great deal of confidence. And the reality is, if we don't acknowledge what's been happening in the past, then we are almost destined to repeat those same mistakes in the future. So when we reviewed our developer peer group, we looked, and especially the ones that didn't have that fantastic experience going into development, we looked again at what's the common thread here. And unsurprisingly, the common thread is a lack of understanding of the geological risk. Now, I'm not discounting risks such as funding or construction, schedule, ramp up, commodity price cycle. All of those risks are important, and you need to mitigate those risks. But if you start with a mismanaged geological database or resource estimate, then you're starting from a losing position, and it ends up being a long, long way back from there. So further to that, when we looked at that developer peer group, we actually looked at the ones that went into administration, looked at the banking syndicate behaviour and the administrative behaviour. We're now trying to make a decision as to, are we going to pay out cents in the dollar here, or do we have half a chance of recutting this resource and recapitalising this business? And we thought, well, who are they looking to? What's the company, what's the resource estimating geologist that they're looking to recut this resource? And we thought, well, let's just go straight to the banker's favourite. Let's go to the conservative resource estimating geologist. Now, and that is effectively what we've done at Mandilla, and I'm not making this comment that it's the magic cream that fixes all of our ailments, but it certainly gives Astral Resources a reasonable basis to believe that sufficient risk management expertise has been put into the modelling of our Mandilla deposit. And as a result, we expect Mandilla to deliver on its expectations. So this picture here, you can see the $2,500 gold price pit shell. Thea now is 1.7 kilometres long. It is 370 metres deep. And fundamentally, Thea is where the money is made. 1 million ounces in a single large open pit. The mineral resource here is only limited by the depth of drilling. EOS, which is to the south, is a 1.5 gram paleo channel with 50,000 ounces, so it's a nice little sweetener for us. Hestia is 80,000 ounces, Iris is 115. Again, as I spoke about before, the scoping study, $2,100 gold price. We expect the ratio of indicated to inferred to be around 70-30, and we certainly expect it to support a very high conversion rate of resources into the production target. So this is a 1 million ounce open pit in a long projection. It's the only projection I'll show. I'm a metallurgist, so not clever enough to talk to these things. It is 70 k's from here, just as a reminder, and 1 million ounces in one open pit is very rare. So if I went and grabbed the S&P Global database, I didn't pay for it, I borrowed it from a friend, and I filtered it, for deposits within 100 kilometres of Mandilla in every single direction. 2 deposits beat it. The super pit, and I don't mind coming second to the super pit, and then you got the Red Hill mine at Canowna Bell that Northern Star also own. And Thea is just behind Red Hill. So a large-scale open pit in this region is both rare and valuable. Thea is continuing to grow. As I said, it's only limited by depth of drilling. We'll have a diamond rig back in the December quarter, looking to extend on the flanks, and on the basis we can extend this on the flanks, we'll look to drive it deeper because the mineralisation continues. One slide on Fayetteville, which is 14 k's from here. This is where we're currently drilling. I can imagine people going, well, if you've got 1.3 million ounces at Mandilla, why are you bothering with Fayetteville? It's a fair question, and our answer is simply around generating mine planning flexibility. The expectation is Mandilla goes into production, and you want to have mine planning flexibility. The real producers will advance their decline, will get ahead of their ore drive development, and will open up as many stoping fronts as they can. In an open pit situation, they'll do their waste movement and they'll have the ore blocks ready to go. It makes good business sense to have that mine plan flexibility, and that's what Fayetteville offers for us. There's the potential for several 100,000 ounce style deposits at Fayetteville. It's likely to be higher grade than Mandilla, and given it is only 50 kilometres from Mandilla, it will consume 0.1 of a gram of gold to truck it there. We are drilling Camperman, Hyperno and Ethereal. All of those projects returned successful drill results in our January campaign. All of them have a defined control to the mineralisation, so it's relatively cost effective for us to either rule these things in or rule them out, and all of them at this stage have the potential to supply that, to supplement that base load that Mandilla provides us. That mine planning flexibility gives us the further potential to de-risk Mandilla as we take it through to development. So, as a wrap-up, Astral Resources does provide a unique investment opportunity. There is no other deposit in our region that has the scale of Thea and that still belongs to a junior explorer. It is both very rare and therefore very valuable. I haven't spoken about the metallurgy, but my background is metallurgy, and this thing is a slam dunk. It is 95% recovery. It is literally 0.02 grams of gold in the solid tail, and there's only over 70% gravity recovery in this. There is 30 million tonnes of processing in this area, about to ramp up to 45 million tonnes. A large-scale open pit in an area as mature as this Kalgoorlie-Kambalda-Coolgardie region. These things just do not come along very often. We are confident our projects have the capacity to continue to grow, and I'm also very confident that the scoping study, when it comes out, probably in the December quarter, will demonstrate just how valuable Mandilla can be. Thank you.
Thanks, Mark. We've had one question come through on the text line about how you are thinking about the processing of ore at Mandilla. Are you considering building your own mill, or is toll treatment an option?
Our scoping study certainly will have 2.5 million tonnes per annum of processing. Interestingly, I think the Kambalda or Coolgardie Shire is pretty forward-thinking. They're putting lots of accommodation in it, at Coolgardie and Kambalda, and so we can actually access accommodation there in town. But the scoping study will have enough capex for the 2.5 million tonnes of processing, mine site, offices, infrastructure, wash bays, heavy vehicle workshops, tailings dams, and all of that.
Great.
Thanks.
Thank you.